One of the biggest questions on the minds of many home buyers, sellers, and homeowners in Vancouver is, will mortgage rates come down in 2024? After holding the overnight rate steady for the third consecutive time, the Bank of Canada says something very interesting in their latest announcement, giving us a big hint into answering this question. In this market report video, I'm going to break down what that statement was, share insights into the expected direction of mortgage rates in 2024, and discuss how the projected rates will impact purchasing power, affordability for home buyers, and the Vancouver real estate market. Hey, what's up guys? Manny Graywall here with Oakwyn Realty. I help my clients successfully navigate through their buying and selling journeys while protecting their best interests and helping them make informed decisions. Before I share the projected mortgage rates for 2024 and also show you examples of the change in the amount of mortgage that households could qualify for, let's quickly go over the Bank of Canada's latest announcement and how that sets the stage for what's to come. In their latest announcement, the Bank of Canada held their overnight rate steady, stating that their current policy is working. While they remain concerned about potential inflation risks and are ready to raise their rates if necessary, there are a couple of factors that are more telling of what they're likely to do. One, this is the first time in the last 2 years that they have held the overnight rate steady for 3 consecutive announcements. And the second factor is the following statement. We need to see a number of months of clear evidence that we're on a path to 2% inflation. When we see that evidence, that will be the time to start thinking about cutting interest rates. This is a statement that offers a big hint about the future direction of mortgage rates thanks to the concept of the impact lag effect. Taken directly from their website, this effect essentially describes the time delay between the Bank of Canada adjusting the overnight rate and its noticeable impact on the economy, which typically ranges from 18 to 24 months. To illustrate, let's take a look at a graph comparing the overnight rate to the inflation rate, which reveals a key pattern. The overnight rate moved aggressively upwards from February 2022 to January 2023, while inflation began falling dramatically since mid-2022, clearly showing how the policy has been working. Considering the lag effect, we can expect the downward trend in inflation to continue, meeting the bank's desired trajectory. And based on the 18 to 24-month timeline, we could see the first potential overnight rate cut as early as spring of 2024. Now, I'm not an economist or an analyst, and nor do I pretend to be. I am basing my prediction on logic and research, but since I've brought them up, what do some of the most influential economists and analysts have to say about potential rate cuts and when we can expect to see them? Many of them are expecting the first rate cut to happen by April of 2024, falling by approximately 25 basis points. They are also expecting the overnight rate to fall by a total of 1% in 2024, bringing it down to 4%. This would bring the variable mortgage rates down by at least 1% in 2024. But how about fixed mortgage rates? For those of you who may not know, only the variable mortgage rates move directly in proportion with the overnight rate. They also move up and down as immediately as the overnight rate moves up and down. Fixed mortgage rates, on the other hand, move based on the bond market, and without getting into a full explanation of how that works, it's the expectation and anticipation of where the overnight rate is headed that influences the direction of fixed mortgage rates. And it's that anticipation of the continued stability of the overnight rate, along with the anticipation of cuts in the very near future, that is already starting to have an effect on fixed mortgage rates. We've already seen the 5-year fixed rate come down by approximately 50 basis points over the last several weeks. So how much further down are the 5-year fixed mortgage rates expected to go in 2024? How will that impact the amount of mortgage that a household can qualify for? And how will that affect the Vancouver real estate market? Before I share that information, just a quick note. I am currently working on a 2024 real estate market forecast report for the city of Vancouver, which I will be releasing soon. If that is a topic that you're interested in, make sure you click on the subscribe button, turn on the notification bell, or click on the follow button. BCREA is expecting the 5-year fixed mortgage rate to come down to 5.5% in the summer of 2024. Based on my conversation with a local mortgage broker who is a trusted expert and has been in the business for almost 10 years, that number could come down to as low as 5.25%. That's a drop of anywhere between 1.15 to 1.4% from where it peaked just recently. Now, let's take a look at how the amount of mortgage that a household can qualify for has changed and how much further it could change in 2024. For the sake of time, I'm only going to be going over a couple of scenarios, the details of which will be on the screen. If you would like to find out how your purchasing power will be impacted and how you can maximize the amount of mortgage you can qualify for, click on the link in the description to schedule a strategy call. The amount of mortgage these households can qualify for has already increased by approximately 7% due to the recent drop in fixed mortgage rates. And based on the summer projections for the rate, it could increase by a further 7%. That's a total potential increase in purchasing power of approximately 14%. This rise in purchasing power will have an effect on certain segments of the real estate market in the city of Vancouver, with one of those segments being first-time homebuyers. In areas where their desired property types have limited inventory and historically have good demand, they could see an increase in competition. For those of you who may be relying on news headlines and are thinking that we've had a significant rise in inventory, I'd caution you to reconsider that generalization. In fact, I have created a video very recently about the topic of inventory in the city of Vancouver, which also includes one of the best buying opportunities available right now. You can access that video by clicking here. Or if you prefer, you can call me, you can text me, you can email me. I promise you that I'll provide you with an informative, pressure-free conversation. Thanks for watching and have a great day.